So today is one of my favorite topics. But before we get into that, I just want to do a couple things. Paula, can you give me a screen share, please? So, who here doesn't know about the live event that we're doing on February 27th? Does everybody know that? And are you coming to it? Do you have your ticket? The reason I ask is we have a real estate agent coming in from Columbus, Ohio. She's been doing AI for 2 years, right? And I look at AI as, man, I wish they froze technology in 1980, to be honest with you, but they didn't. So they came out with a fax machine. They came out with emails. They came out with text messaging. And we went from working 9 to 5 to being on house arrest 7 days a week. And having said that, AI is going to be this next shift. So if you haven't read the book, Who Moved My Cheese, this is one of those Who Moved My Cheese
That is
moments,
a great book.
right? And so the premise behind Who Moved My Cheese is there's four mice sitting in a cube and they're just getting fed cheese and they're fat, dumb, and happy. Well, then the cheese stops coming to that cube one day and one of the mice leaves right now to go find cheese elsewhere. And so you have to stay curious. You have to stay hungry. You have to stay learning. And there was an older guy that told me one time, he goes, when you're green, you grow, but when you ripe, you rot. And so if you sit stale, then your business isn't going to grow and then your paycheck's going to go away. That's your cheese. And so AI is that next piece of cheese where you got to go get it. Now, fortunately for you guys, she's already been beating this down for 2 years. So she's coming and it's going to be a work session where you bring your laptop. She's going to show you what she's doing already. She's giving you the answers. And then when you leave there, you're going to have a full support system. So it's not like just learn it and you get thrown out on your own. So you're going to have a support system behind you so that you can implement this AI in your business as well. Now, she has scaled tremendously. Even if you are not a fan of AI, which I have some friends that are like, I'm never going to use AI, and that's okay. I would still get in a room to see what your competition is going to be doing so you can have that competition, you can have that conversation with your clients about what that agent's using as far as AI goes. Like for me, I know my competition. I know Rocket Mortgage. They don't have one loan officer like we do that walks you through closing, that supports your local baseball teams, that you're going to see at the grocery store. For me, we got to do the right thing because I don't want to duck my head thinking that I didn't do the right thing by you and took advantage of you. Not talking smack on Rocket, but I know those loan officers only work in stages. So the first stage is to get you to sign those docs. The next stage is to get you to sign those docs. The next stage is to get the next docs. I don't know that they really care if you close or not. For us, we do. Like we want your customers raving so much at the closing table that you're like, I have to refer somebody else to them. And we go beyond the mortgage as well. So John Fincham, if you guys, I'm sure everybody on here knows him. He's a local loan officer.
Realtor.
He, what's that?
Realtor.
Or what I say? Loan officer. Yeah. He's a local real estate agent. John is a local real estate agent. And he was so hungry for it that he actually drove to go meet Lauren already. And he met her twice. And so he's so amped up about scaling his business. And I know at the beginning of this year, he's already on fire. I don't even know how many he's already closed this month. But he's like, I'm willing to record a video for you, Jeff, because I think it's so important that realtors get in that room and learn from Lauren on how this works. So I'm going to play this short video of John. Let me give you a screen share here. Tell me if you guys can see my screen here. Can you see that?
Yes.
Yep.
Okay, let me know if you can hear it.
Hey everyone, it's John Fincham. I've been working with Jeff Lagoni on this tech class coming soon with Lauren Lucas. And I can't stress enough how absolutely awesome she is, her education that she's doing, the tips that she's giving us. This is practically your open business in the future of how she is teaching you. She is an absolute integrator. And honestly, I've taken her class in Columbus. I've taken another class of hers, and I will be there in February as well. You can't get enough of it. It's just mind-blowing just how genius she truly is. So I truly would recommend everybody that possibly can get into that class. Let's do it. And I appreciate Jeff for bringing her in. Hey, everyone, it's John.
So I'm going to drop the link to get your ticket in the chat. And then you can just click that link, get your ticket, reserve your spot. I know we've had a ton of people already get their tickets. We've already had 5 sponsors. So I'm guessing there's probably going to be about 70, 80 people in the room. So I just want to make sure that for me, there's more than enough out there. I play with that abundance mentality. There's more than enough business out there for all of us. And I heard it said one time from Beverly's son, and Beverly's on here. He said, a rising tide rises all ships. And we're all in Southwestern Pennsylvania. We're all representing our industry. And I just want us all to represent as best we can to the people in our communities so that they can buy real estate and start building wealth through real estate. And we know it's not the first property that builds real estate. That just gets them in the game. But then we educate them from there to learn how to build wealth, buying that second, third, fourth home, and show them how to do that. So I just dropped the link in the chat. If you want to get your ticket, just click the link and get your ticket there. Now, on the credit. So when I got into mortgages, first out of high school, just to rewind a little bit, right out of high school, I was a pilot. I didn't like flying planes because after training, once you get up to altitude, the humming of the engines next to you is like a fan in your bedroom. So I was falling asleep while I was flying planes. I'm like, I can't do this. So I go back to IUP. I get a degree in computer information systems, and I become a computer programmer for 7 years. I'm sitting in cubes from 1995 through 2001, and I'm trying to talk to the person in the cube next to me, and they're sending me emails. And I'm like, I can't do this either, right? So 9/11 hits, about 90% of the company gets laid off, and 2 guys that I grew up with had a mortgage company like, Jeff, come do mortgages with us. And I did. And my credit went from perfect to garbage. And at the time, I didn't even realize the importance of credit because I always had good credit. Like I just paid my bills on time, but I didn't understand how credit works. And then when I started doing loans, I'm like, man, how does this credit work? Because I'm looking at credit reports and there's some people that pay their bills on time but have lower scores than people that don't pay their bills on time. So I dug in. I sat with credit reporting agencies at that time. They broke it down to me how credit works. In 2007, I became a certified credit consultant. And what I mean by that is I would help people dispute their credit legally, like using the Fair Credit Reporting Act against the creditors. And I did that for a while. But then I got so busy with loans that I couldn't do the credit restoration at a high level anymore. So I went looking for a company like, who can I trust to refer to? And that's where Billy comes in with 700 Credit Repair. I met Billy probably 10 years ago in a mastermind group for loan officers and real estate agents. And Billy does it, I would say, better than I used to do it. But there's a way to do this right. And there's a way not to do it right. And there are companies out there, and I won't say names because I'm not trying to get sued. But what they'll tell you is pay us $150 a month, and they'll slowly dispute like one thing a month for as long as you let them keep withdrawing money from you until you say uncle. And they won't get that good of results. Billy does it the right way. You know, the way I did it back in the day is we would evaluate your credit. We would give you the percentage chances of you getting things deleted. Like, for example, if you have an account that's been paid off and the data last activity is older than 3 years old, that thing had like a 70% chance of getting deleted like it never existed. I was my very first own client. So I had 17 derogatory things on my credit. I got 15 deleted like they never existed. So my scores went from like a 620 to over a 740. Then I was able to buy a house. I was able to get a good interest rate. I was able to get credit cards. I was able to buy, get good insurance, because insurance companies look at your credit as well. Jeff Hayes is on here. He's an insurance agent. He'll tell you they look at your credit. That has an effect on your premiums as well. And so Billy and I were talking before the call, and we were talking like how bad it stinks when you have bad credit. And I don't know credit because I studied it. I know it because I lived it. And when I had bad credit, it was just me and my son at the time. He was probably 2 years old, and I couldn't get a credit card. I was making like $18,000 a year. I'm hiding my truck from the repo guy, and I'm just trying to make it. And my dad's like, hey, man, why don't you go back to flying planes or get a bartending job? I'm like, I can make it. I just need more time. And he's like, I don't know how much more time you have. And the thing that motivated me, we talk about all the time, what's your why? Like, what wakes you up in the morning? What gets you going? My why back then was the vision of my son wearing a diaper with no shirt on, and he's dirty and he's hungry. And he's like, Dad, I'm cold and I'm hungry, and I don't have the money to feed him, right? So like in that moment, you're getting up at 5 a.m. You're staying up late. You're banging on the phones. You're making the phone calls, and people telling you no, they don't want to work with you. Who cares, right? Because to me, it was like 15 no's and one yes is a plus in my book. And I said, if I ever get through bad credit era of my life, I'm going to help other people get through it. Because back then, there was nobody that could coach you up on how to do this. And so, having said that, on our team, our motto is this: if somebody calls us and their credit doesn't qualify today, our answer is never no. It's not right now, but here's your game plan and let's get you there. And so in 2012, I had a lady who didn't qualify. She closed in 2020. And in 2020, she stood up from the closing table and she goes, Jeff dreamed the dream of home ownership with me for 8 years. He never quit on me. And that meant a lot to me. I wasn't even thinking about that I would quit on her. Like quitting wasn't an option in my head. And every time she would stumble, I'm like, it's okay. Here's our next step. Here's how we get there. And so today, when we have somebody that doesn't qualify, again, we don't say no. We say there's one of three things that we're going to do. We're going to say, listen, call Billy. We're going to get you connected to 700 Credit Repair. They're going to give you an analysis and they're going to walk you through how to get there. Or we're going to refer them to a free HUD counselor where they can go in and get A to Z counseling on how to become mortgage ready. Or we're going to look at their credit report. And it could be as simple as like a $300 credit card that has $300 on it. Just pay that balance down to like 10 bucks, do a rapid rescore and have that score jump over the qualifying score needed, which I did before. I had a kid with a 521 credit score denied by 7 lenders. I looked at his credit and I'm like, my man, if you paid his $300 credit card down to 10 bucks, I can get you over 640. He did it. We rapid rescored. He went over 640 in 2 weeks. We closed FHA, right? So there are options out there to get people into houses. And what I don't want to have happen is somebody who's sitting under the threshold of qualifying be told no. And then they can't get into buying a house. They can't get into starting to build equity because we know people that own homes have a higher net worth than people that rent. And the other scary part over the past 2 years, I can't tell you how many people in their 60s or older calling me that are still paying rent that never bought a house, that their rent is now going through the roof and they can't afford it because inflation has chewed that piece up. If you own a home, you have a fixed payment. Yeah, your taxes and your insurance will go up slightly over time, but that payment is fixed and it's affordable for you over time. And that's really what my goal is to get people into home ownership so that when they get older, they're not getting torched by rent that they can't afford. So with that said, Billy, have at it. And I appreciate you taking the time to come on here. And for everybody that's on this call, I would say like today is going to be something you're going to hear where you're going to be able to go out and help other people and impact their lives in a positive way. So Billy, have at it.
Can I share my screen?
Sure thing.
All right, let's see. All right, can y'all see that? So again, my name is Billy Elchow. My office is here in Dallas. If you guys are on social media, which I'm sure you are, on Facebook at Billy Alt 700, my company 700 Credit Repair. I do a lot of tips, credit hacks, credit tips, stuff like that. So if you're on social media, follow me. A little bit about me real quick just before we get started, and I'll make this quick. I'm a consumer credit expert witness. I'm licensed to offer my testimony in both state and federal court. My wife is my business partner. She runs our back end. She's also a consumer credit expert witness. So we have 2 consumer credit expert witness licenses to offer testimony in state and federal court in our office. We're the only ones, there's 12 in the United States. We're the only ones that own a credit repair company. It's a huge deal. It gets me probably half of my deletions, believe it or not. I'm a recognized consumer credit expert. I'm a 2-time international best-selling author. Over 5,000 land, home, manufactured home transactions to date. I've helped over 25,000 people repair their credit. I'm a featured credit speaker on various platforms, YouTube, podcast, etc. Licensed and bonded, and I'm a leads gen expert. I started the company in 2007, 18 years ago. And again, to date, we've helped over 25,000 people repair their credit. Our specialties are credit optimization, FICO scoring, FICO manipulation. I'd say all Jeff cares about. The first thing Jeff cares about for y'all's customers is credit score. I mean, that's where we're at. It used to not be like that, but it is today. So FICO score manipulation is what we do. We coach and hold our customers' hands. We hold their hand down the path of home ownership. I built and started this company based on the mortgage industry and real estate industry, people buying houses. That's our claim to fame. I spent 17 years in that industry, as did my wife. So we just understand that process. We also have an AI DIY software. When Jeff's talking about jumping on the AI bandwagon, He's right. And AI doesn't mean what most people think it means. It could be writing an ad for on Facebook for you guys or whatever. I mean, AI is not everybody's afraid of it and runs from it, it seems like. But man, it's to make your life easier. It's not scary at all. So I have an AI DIY software. You push a button, it disputes for you. The results are as good as what my girls get here. It's $39 a month. So in my opinion, there's no reason for bad credit whenever you can, starting at 39 bucks a month, we can help you. We also do business credit, business funding. We're licensed and bonded through the state. I'm a Texas Real Estate Commission instructor, continuing education instructor. That's what I'm fixing to show you is one of my classes. Our signature programs are homeownership guarantee. We guarantee our clients that within 120 days of starting this program that we'll have them credit score eligible to buy a house. Our signature quote is credit isn't a barrier, it's a bridge. Once you fix it, everything else in your business and life will accelerate. The number one thing keeping people from buying houses right now is credit. The number one reason realtors lose deals is because of credit. That's just a fact. So Jeff wanted me to talk about credit today, and man, I wish y'all there was a tip or a trick or something that I could give you that's a one size fits all, but it's not. Our credit reports are like our thumbprints. There's no two the same. I mean, I can't give Jeff the same advice I give Joanna because her credit reports are different. So rather than go through, oh, tell your customers to pay their balances down, tell them to do this, I'm not going to bore you with all that. I want to go over the state of the industry and where you guys are at per facts, per data, and where we're going in 26 in terms of credit and mortgages. Let's look at a market snapshot real quick. Interest rates right now are steady around 6%, 6.5% maybe. At least in my market, they're 5.7, 5.6-ish. Impacting affordability. Low inventory leads to high competition among buyers. Sellers are holding off due to low locked-in rates, aka golden handcuff mortgages. New construction is offering better incentives, shifting buyers' interest. So interest rates are hanging steady around 6, impacting affordability. Let's look at where they were. This is crazy, y'all. July of 2020, the average interest rate in America was 2.98%, so call it 3%. In January of 21, we were at a 2.65% average. That's a low time average ever. Throughout 2021, we hung around 3%. And then 18 months later, late 2022 is when the interest rate issues and inflation and what were, $8 a gallon milk and stuff hit. I'm exaggerating on that, but I'm not exaggerating on interest rates. 18 months later, we were at 7.25% on the average rate. So now let's back that up and think about what's going on with our buyers. Why aren't people buying? The median price home in my county, Rockwall County, is around $475,000. At $400,000, that payment at 3%, $1,678. P&I, 7%, okay? At 7%, it's $2,681. It's a difference of $1,000 a month for the same house. Plus the fact that the median house prices went up 114%. So a $200,000 house has went up $200,000 in my market over the last 4 years. So by the time you take your interest rate and the new cost of the house, that original house that was $1,678 a month is now $2,300 more per month. And I mean, that's mind-boggling if you think about it. That's why people aren't buying. That's what's going on. Sellers, on top of that, sellers are holding off due to golden handcuff mortgages and increased home costs. I'll give you a perfect example. I'm 55 years old. I've got a house that I paid $500,000 for down the street. It's worth $1 million. I owe 300 on it. I got a 2.9% interest rate, and I got 14 acres down the street or down the road, 10 miles away with my horses on it. I'm going to build a ranch, but I'm not paying 6 or 7% interest rate on $1 million house. I'm not doing it. I'll stay where I'm at and just hang for a minute. The problem that's causing, I'm locking that house up. I'm stopping a buyer from buying and a seller from selling. So there's two transactions that I'm personally holding up. That's just a fact. This has frozen millions of sellers and buyers. They're not selling because buying means giving up a 2 or 3.5% rate for 6, 7. People aren't doing it. Here's something else. There's 144 million housing units in the US roughly, right? Another shocker. Average tenure highlights the typical homeowner today, right now, stays in their home for about 12 years. Okay. 2005, and I know a lot of y'all were in the business then, Jeff, you and I certainly were. 2005, tenure was every 6 years. People were moving and rotating every 6 years. Another analysis shows 47% of homeowners have lived in their home over 10 years. 15 years is 35%. That's the problem. That's locking up the inventory. So in terms of homeowner distribution, 47% of people are now staying in their house 10 years. 35 are staying 15 years. So roughly 82% of homeowners are staying over 10 years in their house, increasing the average tenure to around 12 years. So today, the typical US homeowner stays in their home for 12 years. 10 to 20 years ago, mid 2000s, the average tenure was 6 years. Over 2 decades, the homeowner tenure has nearly doubled from 6 to 12. So let's look at what that truly means. If tenure were still 6 years, homes would circulate through at about 24 million moves per year, right? You got 144 million divided by six. Then you times it by two because you got a buyer side and a seller side. So that's 48 million transactions that happens yearly in this country if the tenure is 6 years. Now, fast forward 3 years, 10 years, 12 years. So we're slowing that down to about 12 million moves per year, 144 million divided by 12, and then times two, that's 24 million transactions. So we went overnight from 48 million transactions to 24 million transactions. And it's amazing how many people felt that hit. I know y'all have. I certainly did. The majority, 95% of my customers come from people like Jeff and yourselves that send me people that want to buy a house, but they got a 560 credit score. We got to get them to a 650. And my business has cut 70%. No joke. Jeff and I were just talking about it. That's what's going on in this country. And we've lost half of our buyers, 3 to 5 years. Specifically, your good credit buyers, because the age and demographics, they're the ones staying in their golden handcuff mortgage. I've got an 834 credit score. I'm your perfect customer. I fit the mold, but I'm locked up now. I'm staying where I'm at. So you guys have not only lost buyers, you've lost your best buyer. Less than perfect credit scores make up the majority of people wanting to purchase. That's a fact. That's where we're at. I'm not going to bore you with all this, but older homeowners, 55 to 64, average tenure 17 years on that. Bottom line, older homeowners, especially those 55 and 65, making up the largest percentage of buyers are the ones locking up the houses. Economic lookout and trends, our outlook rather. Inflation's easing. Interest rate cuts are expected. We're expected another one this year, maybe two. One for sure is what I'm hearing. More mortgage options. 580s are coming back. Bank statement loans in our market. There's a lot of bank statement loans going on again, and those were gone 3 or 4 years ago. Digital underwriting and AI is speeding up the loan process and loan approvals big time. Time kills deals. We're living in a time AI like we thought the microwave sped stuff up, Jeff, when we were kids. Like we're in a different day and age, and if you guys aren't jumping on that AI bandwagon, as he said, you're going to kill yourself because AI is speeding up that process, approvals, the whole process. Credit health is still the number one and most critical qualification for interest rates. We all know that. Buyer challenges and credit insights. 38% of homeowners are millennials. Their average tenure is just 3 years. That's who's turning houses. That's who will continue to turn houses until they're 50 years old. Every 3 years, they turn their house. This group also has, guess what? The lowest credit scores with an average of just 585, which really sucks knowing that our youth in this country walking into houses at 27, 28, 29 years old have the worst credit scores. They're set up worse than we ever were. And I mean, how do you start life with a 500 credit score? I mean, it's tough. So this group has the lowest credit scores, and in my opinion, that's where the low hanging fruit really is. And as we talked before this meeting, Jeff, they're all treated like second class citizens. They really are. Many first time buyers score between 580 and 570. The number one issues with credit in that range, it's an easy fix. High utilization, i.e., paying your credit cards down, collections, and thin files. A thin file can hurt you as much as a thick file with collections. A 40-point difference can mean $20,000 in loan cost over time and whether or not your customer gets approved. We average a 125-point increase, 78% deletion rate. So 40 points can make a huge difference and the difference in whether somebody gets approved or not. Obviously, higher credit scores, more affordable payments. Up to 33% of buyer leads that are calling you or walking in your door are denied due to credit. That's a fact. State of
Hey,
credit in
Billy,
your industry.
Billy, can I hop in here real quick?
Yes, you absolutely.
So, a couple things you said. Number one, I used to teach. They used to have me go to Franklin Regional High School and teach seniors their senior year about being in their 30s. And they took. I love this class because they took kids from birth to death. Like, how do you live your life? And they had me come in their 30s about buying a house. And so when I was preparing for that class, one of the things I was talking about is the importance of credit. And this is back 15 years ago. The average, and anybody can throw this in the chat or raise your hand, just blurt it out. What do you think it costs the average person, the average income in interest over a lifetime between having good credit and slower credit? What do you think the cost is in interest? Like between car notes, mortgages,
Hundreds of thousands.
how much you think?
That's over
Hundreds
a
of
million dollars.
thousands.
Well, when I did it back in the day, I came up with $250,000. And Billy, you're saying, and I haven't done it in recent years. That was 15 years ago. So you're saying today about $1 million.
It's over $1 million is what the data says.
Okay. So like I'm glad you said that. I didn't know it. So that's how important credit is. And this is why I wanted to have Billy on here. A couple other things you mentioned, right? So some of the positives in our market today for the realtors that are on this call that I'm loving, there was a huge cleansing over the past 4 years, right? So if you look at the numbers, and I don't know the actual numbers, I don't know this to be true. I tried to find it. I did my research, say that it's true. For loan officers, I think in 2020 there were 500,000 licensed loan officers. I think today it's less than 80,000. Real estate agents, you guys probably know this better than me. How many agents gave up their license over the past 4 years? So if you made it to 2026, you're one of the few. So yes, Billy's point, the data showing there's less pie out there for everybody, but for those that want to wake up every day and go get it, there's less agents out there, so there's less people trying to get that pie. But, with you waking up every day with the attitude that I can do it and there's enough out there for one person, there is enough out there for you, right? And we have the strategies to help you get that. The other thing, as far as interest rates are concerned, there's a graph out there, and I wish I had it in front of me right now. So to Billy's point, there's a certain percentage of people that have a four handle in front of their rate and lower, like he called it golden handcuffs, that aren't wanting to move because they don't want that payment to go up. The number of people that have a six handle in front at 7 or 8 has grown over the past 4 years. As rates start to come down into the fives, those fours and threes are going to let go, and it's going to loosen up inventory, and they're going to be moving as well. And with the 200 billion that the two government sponsored entities have, Fannie and Freddie, they talked about doing kind of similar to if you guys are familiar with what happened from 2008 to like 2021, the quantitative easing. So the government at that time was buying mortgage-backed securities, which artificially dropped interest rates over that time. That's why rates went so low. It wasn't because of free markets. It's because they were artificially buying mortgage-backed securities that drove the rates down. They're talking about taking that 200 billion in profit that Fannie and Freddie have and buying mortgage-backed securities, which would drive the mortgage rates down, which would cause more inventory to come on the market and volume to go up for all of us this year. So that's why I'm locked in going 2026 is going to be the best year we've seen since 2021. And then the other part, which was near and dear to my heart, I don't know how big of an impact this is going to have, and I don't even know if it can go through, but the institutional buyers that were buying homes, the huge corporations, like they were buying homes. I literally was at WJR speaking at Washington Green Association of Realtors at Washington Golf Club. And I was talking in front, and I said to you guys, I said, hey, who in here has had an institutional buyer buy a property, come in with cash, and outbid every other person that you know? And half the room raised their hand. After I got done speaking, I went into the back, and the busboy was back there. He was 24 years old. He was so mad. And I go, my man, what are you mad about? He goes, I just went to go buy a threeplex, and this guy showed up in a 7 Series with cash and outbid me. He overbid this property by like 20 grand, and they just sold it to him. And so it looks like there's legislation coming through that's going to prohibit big corporations from buying these single family homes, which will unlock inventory for our community, the people in our community, to be able to buy homes, which is where my heart is. Like, I want our people to be able to buy homes. So there's some good side to this too. Did we lose Billy?
No, I'm not sure.
Looks like he got lost here. Let me see if he's coming back on. Any questions about what he said so far?
Jeff, I think you should talk about the borrower we recently closed that went from being ineligible to then purchasing like a $600,000 house. And the credit score increase that Jeff got done with 700 credit in that little amount of time. Like I was like shocked, like completely shocked.
Yeah. Billy just texted me. His power just went off at his house. So yeah, he's out. Um, but so hey, go ahead, Jenny. Talk about that one buyer.
Literally on this client, it was right after I had started with Jeff, and when we first pulled this guy's credit, his credit was scores were below 550.
Yep.
And I was like, there isn't a chance, and like, no way is this going to happen. Like I had zero faith. And Jeff was like, oh no, I got this, sends it over to Billy. Billy takes a look at it, comes up with a plan with the guy, and it was like 90 days is what, they were shooting for. Um, I think it was just over the 90-day marker, and we repulled his credit, and I was like, you've got to be kidding me. Like, how on God's green earth did he do this? I was shocked, but he did it, and the guy was able to buy a $600,000 house that, yeah. And I mean, like Jeff told the guy from the beginning, it was going to be a scratch and claw. It, by no stretch of the imagination, was going to be an easy deal, and that the guy was going to have to work and work hard and do anything Jeff said. And by the end of it, this guy was raving with 5-star reviews, and we put him through the ringer
Yeah.
trying to get this thing done. But I mean, yeah, it was the whole
And to
thing
what
was
Jenny
shocking.
and to what Jenny's saying, like the scratch and claw piece of this, when we have somebody with a 640 score or better, we're usually gonna have a stack of papers like this by the time they hit the closing table, and we're not gonna torture them that bad. When it's a 639 score or less, it's gonna be a scratch and claw. And we're gonna tell your clients up front, hey, listen, we're willing to scratch and claw with you. I just hope we're friends by the time we hit the closing table. If you want to scratch and claw with us, we'll scratch and claw with you. And it might be the day before closing, and we tell you that you're denied. If you want to scratch and claw and be cool about it, we'll go to work for you. And we do have people that do that, and he was one of them. So we scratched and clawed with him, and then he made it to the closing table. We have had people get denied like a day before, 2 days before, but setting that expectation up front with everybody is imperative, right? We have to let everybody know that that's what we're going to be doing through the process. But for us, when we have somebody that doesn't want to scratch and claw, we'll just send them over to Billy and help him get their credit scores up. So, yeah. What do you guys think? Throw it in the chat or just unmute. Do you want to have Billy back on? Because he's out today. And would you guys want to have Billy back on?
Yeah, I
Okay.
think there's a lot of questions that I was going to ask him, just because I think there's so many different things that we need to pick this guy's brain just on any,
I
even your
know.
own credit. There's little things, whether it's medical collections or student loans or all kinds
Here
of
you go.
stuff that this guy has. I mean, and in some of the people that I've sent over to him have called me back and talked about just the little tips and tricks that he's given them of, keeping your credit cards under a certain percentage, or, obviously some of the medical collections have, they were gonna ixnay them from being allowed on your credit. Then they kind of vetoed that in the Senate and state. So now they can at a certain spot, but there's HIPAA laws that prevent it, so he can get them removed. And just little ways that we can all help our clients, which obviously is a big thing. So
Yeah. What we'll do is we'll have him back on. But I saw somebody say, hey, can you tell me like overall, like how can you coach somebody up to improve their credit? First, I would say just have them call us and we'll walk them through it. Cause like Billy said, everybody has a fingerprint, and everybody's unique. So you can't really just give blanket advice, but I will give you the 4 things that is blanket advice that will help you if you know this stuff. Number 1 is paying your bills on time. That represents 35% of your total score. So when somebody here, Billy's back, let's go, baby. So as he's coming in, I'll give you these 4 things. One is paying your bills on time. That represents 35% of your total score. The second thing is the balances on your revolving debt. So your credit cards, department store credit, that kind of stuff. Ideally, you want to keep the balances less than 30% of the limit. The third most important thing is the average length of history that you've had extended to you. Ideally, you want credit extended to you for 8 years. So if you just open up a fresh credit card, you have 0 years of history. If you have that credit card open for 8 years, you now have 8 years of history. If you open up another credit card, you now have two credit cards with a total of 8 years of history. You just cut your average length of history to 4. So when somebody opens up a new credit card, typically their scores are going to drop because it hit their average length of history. The other piece to think about, when people play the interest rate credit card game, meaning like you're going to have an introductory 0% interest rate card for 6 months. So you open that card, you transfer the balance, and you shut down the old card. Most people's scores will drop 100 points when they do that because they opened up new credit, they shut down the old card, so they shut down their history. And then when they transferred the balance, they transferred more than 30% of the limit. So it dinged them on that as well. So you got to be careful with that. Now I learned this from Billy. And ideally, but like to his point, everything's a fingerprint. For every installment loan you have, and by installment, I mean like a fixed payment, like a mortgage payment, which has a term, 360 months, fixed payment. A car payment, 5-year term, fixed payment. A student loan, 10-year term, fixed payment. For every one of those, you want to have two credit cards. And then the last thing is the mixture of credit that you have. So you don't want to have just all installment loans, and you don't want to have just all revolving debt. So you want to have a good combination of credit. And Billy, you're back. So just so you know, man, when you went off, the crowd went silent. I'm like, do we want to have Billy back? They're like, please do. Because you were on a roll, and there were a lot of questions I think people were going to ask. But can you pick up where you left off?
Yep, I can. I'm
Okay.
sorry, y'all. Our electricity our power just went out. It just went out for some reason. So anyway, I texted you also. Yeah, let me share my screen, and we'll roll through.
Yep.
Uh,
And we just went through an example of a success story that you had with us, of the one person that, had mid 500 credit score. You got him to like high 600 credit score and low sevens, and he bought a $600,000 house.
Can I ask a question?
Yeah, let's go.
I
Hi,
hope it's
Tina.
okay. Hi. I hope it's okay. I've been taking pictures of the screen. Is that all right? Is that permitted?
Billy,
absolutely, yes.
Okay.
Billy,
All right.
yeah.
Okay. I was taking pictures of your slides. Thank you.
No problem at all. And
And
I
just
can
so you guys
send this.
know, these replays go on our YouTube channel. So on YouTube, on Lagoni Mortgage Group, you can watch the replays of all of our growth zones that we have out there. So if you haven't seen the AI one, it's out there as well with Lauren Lucas to get a glimpse of what you're going to miss if you're not in the room on February 27th. And but like February 27th is going to be a workshop. She's literally going to be walking by your laptop showing you how to do this stuff. And you'll walk out of there that day with AI ready to implement and scale your business.
All right. So where were we? We were right here. Okay. So real fast, credit rejections at a 10-year high. 48% of Americans were denied a loan or financial product in the last 12 months. Think about that.
Mm-hmm.
For half of America was turned down for a bank, credit card, mortgage, something. 34% of credit reports contain an error. I'm not talking about bad credit that we can fix. I'm talking about a true error that's a violation of the FCRA. 1 in 3 borrowers say they avoid applying. Why? Because they're afraid of Jeff. They know they're going to be denied. And so think about how many people that locked. If Jeff tells me no, he destroyed the dream. He killed. It's gone. So people are afraid of that. Let me do this.
And while you're doing that, Billy, I back in the day when I would teach about credit, the statistical data back in the early 2000s was like 79% of all credit reports have inaccurate data on it. And part of going through Billy's process is getting your credit report accurate. Like we tell people all the time before we pull their credit, and they go, "Oh, I got good credit. Don't worry about it." And I'm like 8 out of 10 people have inaccurate data on their credit, and we need to get that fixed. So that's why when we tell people, if you're getting pre-approved, I love it when somebody says, "I'm not buying a house for 6 months," because it gives us a chance to fix up the credit. My biggest nightmare is when somebody calls me Saturday night and goes, "I just signed a sales agreement, closing in 30 days. Can you do my loan?" Because now I'm like, okay, if I pull a credit score of 720, which still qualifies, but impacts the rate they're getting from what they're seeing advertised versus a 780 credit score, it's going to take me a minute to get that fixed. And I had one guy with a 741 score who I got over 780, and I ended up saving him $4,000 on the hit for his closing costs. So credit score matters even when you do qualify.
And Jeff said before we got started, we jumped on here a few minutes early, and Jeff said If you're 639 or below, we're gonna, how'd you say it? We're gonna,
Oh yeah, that's what we were talking about when you were gone. I did tell them that. I said, listen, a 639 below, it's a scratch and claw. Like I just hope we're friends by the time we hit the closing table, because we're gonna drill you. But a 640 and above is a little bit easier to get to the closing table.
yeah,
Yep.
we're having beers. We're having beers celebrating. So 1 in 3 credit reports contain inaccurate or obsolete information. 25% of consumers have errors serious enough to affect the loan approval. That's a true error. 60% of disputes are resolved incorrectly by the credit bureaus the first time. We have a group of 7 attorneys I'm partnered with that look for FCRA violations. We actually get our customers back. 40% of our customers, 4 out of 10, end up getting about $1,500 back for violations, and then the debt's made whole. 80% of consumers don't know they can force bureaus to verify accuracy under the FCRA. We're not fixing people's lives. We're fixing the credit bureau's mistakes. That's
Ooh,
the
that's good.
bottom line. So credit partnerships for realtors. What we do, realtors close more deals by helping clients improve credit. Clients often become mortgage ready in 30 to 90 days after going through our program. And y'all listen, we hold their hands, we hold them accountable. We sit them down, we talk to them, we go over their credit, like Jeff said. Our focus is we remove bad and add good. FICO has a strong distaste for opening too many accounts too fast. We never have a customer open more than one because, as Jeff said, 15% of your score comes from age of credit, length of accounts, and you certainly don't want to cut that in half. Um, Build loyalty and trust to long-term client relationships. A lot of you guys have been in this game for more, you've sold multiple houses to one person. And, I've been doing this for a long time. We get a lot of 3 and 4 repeat customers, believe it or not. But and that's the goal. You know what I'm saying? Like sell them their first, second, and third house. Top agents have a credit repair partner on speed dial. I get the calls at 8 p.m. Saturday, 2 p.m. Sunday, and I don't mind. I take them. If you guys ever, I'll give you my cell phone. If you ever have a customer you got a question about, call me and we can talk through the credit report or whatever, and I can give you an idea of what we can get done. Action steps for realtors: partner with a credit expert before issues arise. Educate your buyers early. Know your score before you tour, just like Jeff was just now saying. What else can you do? Host joint buyer education or events or webinars with
That's
me, with
good.
Jeff, with whoever, like we're doing right now. Add a credit review to your intake process. Talk about it. It's not scary. Bring it up. Ask them. Offer a free credit readiness checklist. Also, I just lost my share. All right, can y'all see that?
Yeah, yeah, you're still good.
Okay. In today's market, it's not just about leads, it's about getting them qualified. We all know that. It's one thing to get a lead, it's one thing to get a qualified lead. A qualified lead to me is like a 500 credit score. When I get the 750s, it's like, oh man, it's just the opposite for you guys. But 6 simple ways to turn an unapprovable into a close. One, pre-screen smarter. You can soft pull credit bureaus. You can do an analysis before they pick a home. You can go to myfico.com. You can go to free credit report doc. You can go get their score online and do a soft pull that's not going to create an inquiry. Instant FICO simulation on myfico.com will show what 30 days of credit repair could change through different monitoring sites. You can go to a monitoring site and it's $1 for 7 days typically. And the simulators will show, okay, if we remove these 3 deletions, this is what the score is. If we pay this down, this is what the score is. And I'm not saying y'all get like mega involved in that because it's foolish to waste time with somebody with a 500 credit score. Let me do that. But you can still talk about it. You can offer and control the credit solution. Our fast track credit repair program, it's a 45-day credit improvement cycle. Send them to us. Like that could be the source. That could be the answer. Transparent affiliate portal. Make sure whoever you deal with is tracking your customers so you can track your pipeline, which is what we do. With us, with our realtors, we have one-click submit. You can submit from your from your CRM. You can fill out a form. You can get them to us however you want to, and our team handles the rest. I'll get into that more in a second. Partnering with 700 realtors, love working with us. Zero setup cost, real-time tracking. All of our guys get a dedicated account rep, one person you work with. Fast turnaround times. Step one, what we do is our realtors or loan officers submit a customer, whether it's through the portal or you email me their information, they call us, you give me their number, I call them. We call the customer, we analyze their credit, we get their credit, we pull their credit through monitoring, we look at it, we go over all the bad stuff with them, If they sign up, we say, okay, now let's make a game plan. We do a recommendation sheet. We say, we recommend you pay this down. We recommend you go get this little $25 a month installment account because you got 6 revolvings and 0 installments. That's going to hurt your score. So we do like a recommendation sheet with them. We send letters out. My auditors do the letters. We in 45 days we go repull credit and we rinse repeat that process 4 times. You guys get notified. Jeff gets notified whenever that customer goes from a 550 to a 680. Jeff gets notified before the customer does. He brought them to the dance. I'm going to let him know he's going to be the hero. He calls them, not us. We let y'all call him first because I don't want them going to Joe down the street and buying a house. We do not slow down y'all's process. We slot right into your existing sales process. I've got people using our program, single one people, mobile home guys and loan officers that are doing 6 to 8 deals a month with us. And I'm not going to do the math, but you guys do the math in your head. And all this is a pipeline. All this is throwing people up against the wall. Some are going to listen, some aren't. Um, our claim to fame, the big thing about us, we've got a home ownership guarantee. When your customers call, we discuss what their goals are. If they're trying to buy a house, we say, awesome. We've got a program that was designed for clients who have the desire and financial ability to purchase a home, but lack the sufficient credit score to enable them to qualify. So any applicant who enrolls in our program, they'll be credit score eligible, guaranteed within 120 days is what we say. And how do we do that? Because we do multiple letters. Jeff was talking about Lexington Law. They dispute 3 items, one credit bureau at a time every month. So it takes 3 months and 3 months payments and an enrollment fee to get 3 things deleted on all 3 bureaus. We don't do that. We do unlimited letters, unlimited audits, unlimited disputes. My attorneys look at the stuff right out of the gate. My middle son, my second oldest son's an attorney. He's getting his FCR stuff together right now. He looks at my stuff. And again, I'm a consumer credit expert witness. We get a POA, a power of attorney signed, and I sign off for my customer saying, hey, this is what's going on. And it just holds a
That's
lot
good.
more weight. So our home ownership program is our main deal. Yes, sir.
That's good. I didn't even know that was a thing, Billy. Like that's phenomenal. Yep.
Yeah, no, that's the whole FCRA deal. There's so many violations right now because during COVID, everything eased up on collection companies and creditors. So now it's like the wild, wild west with these collection companies. They'll say the date of last activity was last month. That's a violation. That's a $1,500 violation per bureau and with the creditor. So if you get one, you get four. So it ends up being, 15. It ends up being 3,000 or $6,000. The attorney keeps like 70%. The debt gets made whole, and then the customer gets money back. So it's a great thing. Again, if you guys are on social media, follow us on Facebook. I do a bunch of tips on my 700 credit repair page. We're on Facebook at 700creditrepair.com. And then my website, y'all can go to our website. It's 700creditrepair.com. And our home ownership, all of our stuff's on there. Our testimonials are on there. A little bit more about our portal. Our portal for dealers and clients. I say dealers being mobile home dealer. I do a lot of stuff with mobile home customers or mobile home salespeople and realtors. So our portal for our realtors, it tracks the client's progress. There's instant notifications in the portal. We have an app for our clients with push notifications. So on our updates, we put it in the app, notify them. We put it in their portal, notify them. We text them, we email them. Melissa emails Jeff. You can ask him and says, hey, your customer went from a 560. They're now a 620. They still need to pay this card down. They haven't opened this. I'm going to go ahead and do another round while they're doing that. And let's say round 2, we get them ready. Melissa, we pause the process. We remove the in dispute comments because Jeff can't have them. And then get them approved. After the approval, we finish their program. All my programs are 6 months period. It doesn't usually take that long, but it's the 6 months is what's in what the contract is. By law, I have to give them a 6-month contract per CROA to be licensed and bonded. The portal shows the starting score, the current scores, what's been deleted, the notes from my processing team, the letters. You'll always know where your customer stands. There's no chasing, no confusion. The only thing I really have to offer you guys is service and my commitment. I mean, that's the biggest thing. That's what I hear from my guys I do business with. My competitors don't do is they don't communicate. It's
Right.
like I sent these people to credit repair and it went in this black hole. That's what I hear all the time. We're not like that. We run this as a business and a company, not credit repair. So, again, our communication and service is really all that we have to offer you. Again, we're licensed and bonded. We're FCRA, FDCPA compliant. We don't just do basic online disputes. We do factual audits. And again, we're partnered with the law firm. We're not doing credit repair in a basement. We're licensed. We do audits, legal operation. We've been doing it for 18 years. This is what our customers see. They get a audit report whenever they sign up with us. It shows what's on their credit report. It shows their insurance report. It shows all kinds of stuff on the back end too. So here's some real results. Recently, 699. Like, look at the interest rate different. If you go from a 690 to an 800, the interest rate is going to be different. Or maybe it's a stated income loan. Like things change at 800. Again, here's our portal. There's a workbook in the portal for our customers, very transparent, shows their starting scores, current scores. It shows their agent. This is Cole, my son, been with me since college. He's been here 10 years with me. He's my VP of sales. One of my twin girls, 30 years old, been with me 5 years. She's another one of my portfolio managers. My wife runs our back end, so my lead processor, been with me 15 years. So like we've been around for a minute. Everything's super easy on the portal to upload stuff, get me what I need. This is what your customers see. This is what y'all see. Jeff to date sent me 90 clients or our customers. He can go click on these and go see what their scores are, what's going on. Here's where they started. Here's where they're at. So these are the updates that he gets through his portal on top of the text messages and emails. Plug into our 18-year proven process to see if it works or not. That's the bottom line. Send us a few clients that are struggling to buy due to their credit score, or a few clients who aren't buying because of their interest rate. Let us prove ourselves. Sit back while processing gets their job done. You can track your clients' results through the portal 24/7, and then remain in contact with your clients. Once they reach the qualifying score, we'll hand them back to you on a silver platter. If you guys want to really, really dig in and dive in and understand, more how we can do it, how we can like really plug you in, you can book an affiliate consultation call with me anytime. We can do a Zoom with your team, with you, with whoever. We can run credit audits on your past declined deals. I have a lot of people that will go hit their past database and say, hey, man, we got a great new credit opportunity for you, a guaranteed home ownership program. If you've been denied credit, let us know, and we can help you out. So anyway, with that, I know I blew through that fast, but if you guys
Billy,
have any
couple things.
questions,
I
yes,
got,
sir.
I got one question in the chat. It says, if you're a single member LLC
Yep,
and have business credit, does that
yep.
tie into your personal credit score?
No. Unless you sign a personal guarantee. If you sign a PG, like my truck's in my company's name. My son's, I just bought my 16-year-old truck. It's in my company's name. Why? Because I'm going to build a house on my land. We were talking about that earlier. And I can't have Jeff say, oh man, you gotta show another $100,000 in income because of your budget or whatever, right? So I utilize 700 credit repair. And if it's built and done correctly, GMAC to buy a car, they want you to have 6 accounts and an 80 paydex score to not have a PG. So if you've got an LLC with no PG, yes, you're good. If you got an LLC and you signed a PG, no, you're still liable for it. So you got to be, just because you got a credit card that says American Express doesn't mean it's a true business card. It could say ABC Realtors, but you're still kissing the note. You're still on paper with a PG. So I've got a program I normally sell for $9.95. It's a 6-step digital series. I sell it to all my referral partners for $500, half price, and it's a 6-step series that you walk through. It gives you the first steps or the 10 credibility steps to get credible and fundable in the eyes of lenders. Then it gets your business credit bureaus. Then there's 100 different lenders that you do like a pyramid and start stacking. So if anybody wants that, I would do it for y'all for the same price if you're trying to build business credit. Business credit's the greatest thing since 7-Up, or maybe it's better than a pocket on a t-shirt, Jeff. I'm not joking. It gives you two completely different entities. I got me and I got my business credit. So I've got two deals going. You know what I'm saying? It doesn't affect
Yeah.
my fundability or whatever. And business credit's different. They don't give a crap about um budget, or they just don't care if it's built correctly.
Yeah, that's good. Any other questions here? While we're waiting for more questions, the one thing I'm going to talk to you about, you said a lot of the seniors are sitting in the houses, right? They're
Yes.
retaining their homes, they're not moving. And I just saw a number the other day that seniors over 62 and older are sitting on 14 trillion, that's with a T, $14 trillion worth of equity in their homes. And I share that with you because if you know a senior that's 62 years old or older, and I've been sitting with seniors recently, they don't know about reverse mortgages. So I've given a couple presentations on reverse mortgages. I start the class by going, who thinks a reverse mortgage is a bad thing? Every single hand goes up. And then by the end of the presentation, I go, who still thinks a reverse mortgage is a bad thing? I would say almost all go down. I had one guy not put his hand up. I go, do you still think? He goes, I'm still not uncertain. But there are seniors that are literally buying groceries on credit cards because they don't have money. They're on fixed income, Social Security. The cost of everything has gone up so high that they can't afford anything, but they're sitting on hundreds of thousands of dollars of equity in their house that they could tap into because you can't spend the walls of your house, right? But if you get a reverse mortgage, it allows you to get cash out of the walls of your house that you can live a little easier. And you can get that money in one lump sum. You can get that money monthly, or you can get that money and pull it out however you want. Like there's a lady right now that I know that owns an $800,000 property free and clear, and she's single and she's 70. She could literally get $2,000 a month mailed to her every month and live a little easier if she wanted to. Or she could pull $385,000 out, right? And invest it. Like sit with a financial planner. I know, I think I saw a couple financial planners on here. I think AJ's on here, AJ Williams. He's a financial planner. Sit with them, invest that money. That home's still going to appreciate of whatever you owe on it, but then invest that money and have that money go to work for you. So, any other questions for Billy? Did you guys get something out of this today? I did.
Somebody asked about building credit for kids coming out of school. There's a couple things you could do. For mine, my daughter bought a new car 3 years ago, and she was like a 760. But for mine, I put every one of them on one of my credit cards. Capital
Yep.
One will do an authorized user, American
Yep.
Express, Discover. So I put mine, I've got a $20,000 Capital One card that I don't use and never had. I just don't use it. And I use the rest of them. I don't use that one. So I put all my cards on all my kids on that card, and they're still on it. I mean, they're still
Yep.
on it from 10 years ago. So you could do that. Some people maybe don't have that. Maybe you don't have an account you could do that with. That's fine. They can get like a Chime card. And their Chime has a couple different programs, but basically Chime, you take like $500, get a secured credit card for lack of a better term. It's not secured. Now it's like a preloaded debit card basically. So now you can use 500 off that card, and then whenever you reload it, that's the payment history. So they can go get $100 on that card and get their gas money, and then it's showing like $100 a month being paid. So Chime's a good one. Capital One has some really, really good no credit starter cards. You can add an authorized user at any age, Jenny. It doesn't matter. I mean, you can, if you have a social security number, you can have a credit report. The credit report does not discriminate against age. I could put my 10-year-old as an authorized user. He has a social. He don't have a job, but he has a social, so it's going to show up at any age.
Did
Um,
you say did you say you could put a 10-year-old on as an authorized
yes.
user? I did
Yeah.
not know that. I
Yeah.
waited till my son was 18 to put him on.
Well, and
Okay.
it doesn't matter because there's no reason to put it on there at 10 years because he's already going to get the history if you throw it on at 18. You know what I'm saying?
Okay.
It's
Oh,
not
okay,
like
got you.
damn, it's not
Yep.
like I should have put him on at 10 because he's only getting your history anyway. You
I
know what I'm
got you.
saying? So at 18, that's fine because they can't do anything till they're 18 anyway. Legally, they can't get a credit card till they're 18 or whatever. So you could do it as early as you want to. Somebody asked, AJ asked something too, Jeff.
Yeah, he said, what's the single biggest mistake people make that hurts their credit even though they think they're doing the right thing?
They have one baddie, so they're in a baddie score bucket. Example, a 30-day late 6 years ago when you co-signed for your son on a Toyota account, that's the only baddie you have. Everything else is perfect. You're being lumped in a score bucket in a starting score with people who have 1 to 5 bad accounts. So a single baddie, a single negative mark can kill a credit score no matter what it is. A lot of people don't know they have collections. A lot of people don't know they have violations on their report, i.e., if there is a collection, the date of last activity is wrong or something like that. Balances are probably the biggest thing that we see, like right out of the gate that you can do. 9% is the number, y'all. If you can, if utilization can be at 9% or below, that's the number. 30's good, 10's better, 9's great, and then 1%'s the best. People with an 800 credit score have a 1% utilization rate. They use 1% of their credit cards. And to play that game, like if I'm going to go buy a new house or whatever, I use my credit cards and I pay them off monthly. But if you play the game and you do pay them off monthly and you want to watch your score and keep your score up, call Capital One, Discover, find out the statement cutoff date, call them 2 days before and pay it the 27th when the statement cuts off the 30th. That way, that zero on the 30th is the balance. That's what's getting reported. That's the data that gets reported. So if you're fixed to go buy a house, a car, whatever, and you pay your credit cards off, pay them off 2 or 3 days before. Another thing, FICO's got it has.
I want to pause on that real quick. So the one thing is, so what Billy said, and Bill, I was going to ask you this question anyways, but you just verified it. So credit card companies, creditors don't report real time to the credit bureaus. So you know that, like, they don't report real time, like every day. They only report one day a month. And what Billy was saying is, like, find out what day they're reporting to the bureaus. What's your cycle date? And Billy, correct me if I'm wrong, but like back in the day, 90% of the creditors reported on like the 27th day of the month, and the remainders reported on the fifth day of the month. But you got to find out when your cycle date. And what
Yes.
Billy was saying is 2 days prior to the cycle date, pay it down to that 1%, right? So that when they do report, it reports that 1% and your credit score spikes.
Or if
Yeah.
you're so when you're talking to customers out there, and if you get brought up, like I'd bring it up. I'm a mobile home guy, so that was the first thing we ever talked. Nobody walked on my lot and looked at the house until I had their credit report. So you can bring that up and talk to people about that and say, look, if you're trying to get your score up before we submit to Jeff, talk to him, but make sure if you pay those credit cards off at the end of the month, pay them a few days early before the statement cutoff date. You think to me that's simple, common, but people don't think that way. They're not in
Right.
front of this every single day. Like I forgot more about credit than I know, no joke. And that's what most people, they just don't think, everybody knows that, but they don't think about that. So again, you are now the realtor they trust, the professional they trust, the
Yeah.
professional they're seeking, not the salesperson they fear and are afraid of whenever you address that stuff and give them those kind of tips and stuff like that. Another thing FICO has a strong like for is a zero balance account. So you're better off rather than paying like 500, 500, 500 on 3 cards, pay one off and let the other two individual utilization is important on credit cards, but overall utilization is more important. And FICO loves 1 or 2 accounts with a zero balance. So you're better off, believe it or not, having $1,000 card maxed out and one at zero. FICO loves the zero balances. So
I did not know that. I
yes, he
always thought
loves
you
it.
wanted like a nine. I mean, you corrected me. Like that stood out to me. I always thought it was 30%, but you correctly said it's 9% utilization. But I
And
always
30
thought
is
you wanted,
good.
but I always thought you wanted 9% across all 10 credit cards that you have. But
Yep.
you're like, hey, you're better served having one paid to zero.
So utilization, the first thing, utilization is on total, not per
Yep.
card. Once you hit about a 720, it gets to per card. So originally it's just don't even like I tell people, don't even if you're 560, don't focus on each card. Just get to
That's
30%.
good.
Just get below 50 and get to 30. Or if you're maxed out, that kills you. If you are $1,005 on $1,000 limit, you're $5 over the limit. FICO does not care about balances or amounts. It cares more about the date and the activity of what's going on. FICO is just saying like, oh, pump the brakes, man. This guy's got 7 inquiries. He had 2 new collections, and now he's over the limit on a credit card. You know what happens next? A charge off. You know what happens then? A bankruptcy. So like that's the attributes. So like we're going to pause this right now and raise a red flag so Jeff don't give them loan money for a mortgage. That's what happens. That's exactly what happens. And FICO is so accurate. People are like talking about, well, it's not. Yes, it is accurate. FICO does not have a memory. The credit bureaus don't have a memory. You cannot go back, which is great for credit repair because like if I had a 30-day late and it was holding me back, once I get deleted, FICO has no memory of that. There's no way to find that data. It's gone. You can find it on credit monitoring because they're saving it. The credit bureaus don't save data. It's right now, and there's no records. It's gone. So there's no memory. It doesn't remember like, yeah, it's gone now, but you just got to delete it. So we're gonna suppress your score. It's not like that. You can manipulate a
So
FICO
good.
score easy.
That's so good. Um, and I wanted to tell you, the people that you help with credit, like I know often real estate agents and myself included, we get shopped like a commodity. Like, in the beginning, they're just like, well, what rate do you have? And that's not really what they're asking, but they're like, I just want to go with the lowest price. Or they're asking you, what's your commission? What do I got to pay you? Not knowing you're either going to sell their house for 15% more than what it's worth. But when you have somebody who's credit challenged and you walk alongside of them, they're way more loyal. And not only are they more loyal, they'll end up referring you more business down the road as well. So just keep that in mind. So having Billy and me in your toolkit to not say no. So if somebody goes, I'm embarrassed, I don't want to talk to anybody, don't be embarrassed. Like, we got to start that conversation. I don't care if their score's a 480. Like, we have to start that conversation and start building this plan out. My job is not to judge people. My job is to help people. So like when they call me, I'm like, don't feel bad. I lived it. I was there. So I get it. And you feel like crap when you have bad credit. Like, they make you feel like a bad person. And I felt lowly. I felt horrible. The collection calls coming, the things they say to you. And people, when you have bad credit, it's not because you just stopped paying your bills. Something happened, like life happened. You lost your job, you got sick, you got a divorce, something happened for you to not pay your bills. So it's not judging somebody. It's like, let's just help them get back on their feet. So I know we're an hour into this.
Hey,
One
Jenny,
last,
can I
yep.
give them my phone number real quick?
Yeah. What is it? I'll put it in the chat.
Jenny, it's 469-338-3142. That's my cell. You guys can call me if you have a customer. I'm going to give you my phone number for our office is 972-279-0444. So if y'all have questions, hit my cell phone. If you have customers, just have them call the office. Or really, Jeff has a portal. If you guys really want to get into this and get more detailed and really take advantage of this, hit me up. Jeff can connect you with me. That's my phone number. And we can get you your own portal. It would be under Jeff.
Yep.
That way, and that way he's in the loop and all that stuff. But if you guys want to dive a little deeper, I mean, I'm here, man. That's what I do. I help. Y'all are my customers before my customers are my customers. So I'm here to do anything that I can for you. And again, Jeff and I have done business 10 years, probably. It's been a while.
I love your passion. I love it, man. This is
Thank
something
you,
that's
man.
near
Thank
and
you.
dear
I
to my
love
heart too.
yours.
Yep. All right, guys, have a great day. Thanks for spending time with us. I hope this helps you do more business and help more families.